Welcome back, both our audience here and live stream. Again, if you want to send in your questions from around the world, hashtag MIT Live, and we will do our best to make it part of the discussion as we go forward. It's now my honor to introduce Yasheng Huang. Yasheng is the Associate Dean for International Programs and Action Learning at MIT Sloan. He's also international professorship in Chinese economy and business, and is the author of Capitalism with Chinese Characteristics. Yasheng, the panel is yours.
Thank you, Stu. Welcome everybody to the second panel of MIT Sloan Latin America China Conference. This is a timely topic, as the previous panel shows that the topics of economic slowdown are both timely and complex for both regions, both in China and in Latin America. We're fortunate and privileged to have four extremely distinguished panelists on this topic on Chinese economy. And I'm going to introduce them very, very quickly. The more detailed biography is in the brochure for the conference. I'm just going to introduce their title and then leave more time for a presentation. I'm going to start with Mr. Gao. Mr. Gao is the former Vice Governor of China Development Bank. China Development Bank is heavily engaged in Latin America. The loan portfolios of China Development Bank in Latin America are bigger than the World Bank, IMF, and the Inter-American Development Bank combined. Right? So this is an important actor in Latin America, an important financial institution in China. Next, we're going to have Professor Bai, Chong-En Bai from Tsinghua University. And he is expert on economic growth and development. He's also Associate Dean of School of Economics and Management of Tsinghua University in Beijing. And then we're going to turn to Professor Pei Sun, who is a professor at Fudan University School of Management. And he's going to talk about macroeconomic development, financial issues in the Chinese economy. Last but not the least, we turn to Dean Xu from Lingnan University College of Business at Sun Yat-sen University. And Professor Xinzhong is an expert on Chinese financial system, and his presentation is going to talk about financial issues in the Chinese economy. So unlike the previous panel, this is not a MIT mafia in the sense that none of us got our PhD at MIT. Even though I'm a professor there, I didn't get my PhD from MIT. So instantly I feel inferior to my other colleagues. But there's a sense that we are a MIT mafia. MIT Sloan School has had a program of collaboration with Tsinghua University, with Fudan University, with Lingnan College for the last almost 20 years. And it's a long-standing relationship, and it is a relationship that has brought about benefits to both MIT Sloan and the Chinese universities. China Development Bank, we have been engaged with China Development Bank in terms of research and in terms of executive training, so we have a relationship with China Development Bank. We have also agreed among 5 of us, if there are difficult questions from the audience or from the social media, we're going to answer those questions in Chinese. So that's the way for us to deal with difficult questions. Let me turn to Dr. Gao, who is not just a business practitioner, but also an outstanding academic as well. a first-rate economist. Let me turn to Mr. Gao and for his presentation on Chinese economy.
10分钟是吧？ Good morning. I think I will focus on China's microeconomy, and I'll give you a historical perspective, and we can see from the historical factor how the Chinese economy moving forward. I think in 1980s, after reform, the main theme of the economy is decentralization for the whole 1980s. And due to the decentralization and the relationship between government and enterprises, relationship between central and local government changed from planned economy to a kind of contract responsibility system. And that hoped to give incentives to local governments and the firms, the private sectors, and so the economy started to boom. However, in the 1990s, we have a trend of re-centralization. That is, government resume more power. And the good thing is as the economy move forward, and reform is the ongoing process, and there are more necessity for the economic management. So in 1990s, we have a lot of developments in financial system and financial market, and that is we call the specialized bank become commercial banks. So we have the three policy-related bank, including China Development Bank. That is in 1994, the financial system reform. In addition, we have fiscal reform in 1990s, and that is change the contract responsibility system to a sharing tax system. That also take place in the early 1990s. So there are a lot of development in financial system and financial market. So in the whole 1990s, the economy still boomed because in 1990s, as a result of decentralization, the private sector started to boom, and people become wealthy, and the savings rate have raised very rapidly. So for the whole 1990s, the economy relied on the highway investment. After the 1990, for the new millennium, many of the economists and the the researchers and the politicians start to bearish about China because they think in the new millennium, the reform dividend already drained out. There's no new drivers for the economy. But in fact, after the new millennium, we embrace a new era that is WTO participation. And for the WTO participation, China open is the export to the outside world, and the world's open market for China. That puts the demand for Chinese goods. But however, on the supply side, still, and we think the efficiency of domestic firm not very high. So China start to improve the infrastructure. That is a function of China Development Bank. So starting from 2003, China Development Bank pursue a policy of what's so-called development financing. The development financing has to do with the relationship of CDB with the local government. So we sign contract, and CDB gave loan to local government, so local government invested in the infrastructure sector. And as the investment, the land prices start to move up and attract more commercial investment. And then the government increase financial revenue, that is tax revenue. And so the economy has a vicious cycle to move up. And that is about the whole 2000s before the financial crisis. And last year, I did research with MIT Sloan School PhD student on China's the CDB's contribution to the economic growth. That is the 30% the positive externality. That means it has a spillover effect to the economic development. So in the whole 2000, there's two sides. The demand side is the WTO participation opened the world market, and there's a supply side that improved the infrastructure and boosted the exporter, the manufacturer's efficiency. And I think that is the three different decades and three different stages. And what left for the economic driver for the next decade? Since the 1980s, China pursued so-called financial repression. And this is a policy for many of the emerging countries followed, because the financial resources are very limited. So the financial resources are very much centralized, as I mentioned in 1990s. However, the financial system and financial market is still at the preliminary stage. For example, China still focuses on the indirect financing through banks. So it's a bank-dominated financial system. We have big four or big five, that the ICBC, CCB, BOC, and Agricultural Bank of China, even add up Communication Bank. So these five very much dominate the financial system and financial market. And we have the interbank bond market. That is a market run by the central bank. So capital market has been underdeveloped. So financial efficiency is not very high. Because of the interest rate still regulated by the government, loan rate already liberalized recently, but the deposit rate is still regulated by the central bank. So the people prefer put money not in the bank, so they move money to invest in the real estate as a kind of savings or investment, not for their own housing accommodation. And then when the government cracked down the real estate market, and then the depositors would like the money move out for the health management, that triggers so-called the shadow banking issues. Shadow banking issues not only wealth management, but also the off-balance sheet activity. And that is due to the bank-dominated financial system. And bank has been constrained by the capital adequacy ratio, by the credit ceiling, and by the Basel III requirements. So the bank cannot afford, to give more the loan, and they keep money within the system, and that is a kind of waste of money. So that is the big problem. I think the next round will focus on the financial system and financial market reform, and that will focus on to boost the domestic capital market and make it more efficiency. And yesterday I talked about the government strategy. I think China cannot afford for continuation of the export-led strategy. And China had to shift the domestic consumption for strategy. Not this moment, because we cannot boost the domestic consumption without a fundamental change of our current social security system. So China will continue to rely the investment. So last year, many people say the government would like to completely hands off. That is, the government do nothing, and that is not that is impossible in China at this moment. So this year, China have micro stimulus, that the money that the central government would like to invest in the railway, in the small, medium-sized enterprises, microfinance, and also for the housing to the low-income residents. And that hope to boost the economy, so the economy start to pick up at this moment. So the domestic investment will come hand in hand with international investment. And CDB is the largest instrument for the Chinese government to invest overseas. We call it go outbound investment. And CDB also has been very active in not only Latin America, but also Africa, Central Asia, Western Europe, and the Southeast Asia. So a lot of investment because we have imbalances in our external account. We generate current account surplus. We need to rebalance the economy by investment. And that creates an opportunity for China to increase our economic ties with Latin America, because China has the highest savings rate. We cannot invest more in the domestic market, so we would like to invest in different regions. And so far, the investment in Latin America turned out to be very successful because the two regions are complementary. And we are all in the emerging countries and underdeveloped infrastructure and institution transition. I think there's a tremendous room to maneuver in the future. Thank you.
Thank you, Dr. Gao. I think his comments connect very naturally with the previous panel's discussion focusing on lack of infrastructure building in Latin America. So there's a trade flow, there's also a capital flow, and maybe the two regions are complementary in that sense as well. I see can we have the PowerPoint presentation on the screen? I see the next presentation. No, but the one that they put up is you, Professor Sun. So why don't we have some labor market flexibility here, and then just it's easier for us to adjust than for them to adjust. So actually, Professor Sun's topic connects very naturally with with Dr. Gao's topic. His topic is going to be about growth aspects in China, implications for Latin America. Dr. Gao talked about the financing instrument, and Dr. Sun is going to talk about the trade and investment implications. Can we have the presentation on the larger screen? Yeah, so it is here, but it's not there. Okay.
Oh, it's wrong.
Okay. So it seems that it requires further labor market flexibility. Okay, so why don't we turn to, terribly sorry about this. So we turn to Professor Xu's presentation, since his presentation is on the screen. Yeah, okay. Professor Xu.
Well, good morning, everybody. First, I'm grateful to MIT Sloan for inviting me and for looking after me so well. Oh, you go back again. So can we go back?
Oh, it's right.
But doesn't matter really.
No.
You want to switch it back?
Presentation, so if it stabilizes here, then
yeah, we are very, very flexible.
That explains why Chinese economy is successful. Very flexible. Okay, sorry, Dr. Xu. Yeah,
I have the
Professor Bai.
Control, remote control. Yeah, control. Okay, thank you.
Well. Okay, I'm going to give up. As long as we have one equilibrium, I can deal with it. Multiple ones, I cannot. Right? So, can we make sure that we stay? Okay, so. Okay, it's my turn. Okay. Yeah, after circle.
Okay, my turn. So I have a very short presentation. Basically, I have 3 slides, one on economy, one on politics, and the third one is about implication for Latin America. And it's my deep privilege to be here to share with you my personal view about growth aspects in China, and I will try to relate this discussion with the implication, potential implication for Latin America, both for policy and for business. So, okay, great. Okay, so the first slide is about a very brief evaluation of the growth aspects for Chinese economy. So I would like to start this discussion with a very simple decomposition, because the textbook version of economics suggests that the 3 parts, right, of the GDP growth. First, you have investment. Second, you have consumption. Third, about the net export. That's basically the difference between export and import. If you look at the 3 different parts in China, so you may know or may not know that in last year, China's GDP growth rate is 77%, the lowest in the last 10 years. So basically, basically we have 7.7% GDP growth. But can you imagine the respective contribution of each of the 3rd parts of the GDP growth? So you can make an educated guess from this. So, but I can tell you the result. Basically, investment, at least according to official data, investment and consumption contribute 50% of growth, respectively, to GDP growth, which means that in terms of net export, right, the net contribution to GDP growth is almost 0, because we have a large volume of imports and we also have a large volume of outputs. So although, you know, the absolute level of import exports are very high, but in the end, it is investment consumption that contributes to net GDP growth in China last year. And if you want to evaluate the growth aspect, we may look at the impact, the future trend of the investment and consumption. From the investment point, we know that there's a lot of research and a lot of policy studies talking about the over-reliance of the Chinese economy on investment. So because most investment driven by government, driven by policy, because of the banks are controlled by government, so we have some problem. We have a relatively a small amount of consumption, and we're talking about the rebalancing of the investment consumption. And from the investment point of view, my personal view and many other researcher view is that investment is very important at all. So because we should not treat investment and consumption as substitutes, because investment and consumption can go hand in hand. And the more critical question is about what kind of investment we have, right? And in the future, I think that the prospect of the Chinese economy depends upon the drivers of the investment, whether they are from the government-initiated investment or the private investment. So we need to be very careful about how to unleash the investment from the private sector, right, to contribute to the Chinese economy. And the consumption side, according to official data, the 50%, right, of the GDP growth come from consumption. But actually, some researchers, some economists suggest that the consumption data in China is not very accurate. Actually, consumption has been underestimated. So if their opinions are true, then the net contribution of consumption to consumption to GDP growth is much higher than 50%. Maybe the majority of GDP growth come from consumption, or household consumption. So in that case, I think foreign businesses need to have a very clear idea of the implication of this, because in the future, more GDP growth, more growth driver will come consumption rather than investment. Then that will have a very important implication for foreign business. For example, recently The Economist, the journal, have a discussion about the implication for Australia and New Zealand. You know that Australia benefits great from the boom of the investment because they can export iron ores to China. But recently, because the investment rate is going down, so the export of iron ore slow down. But on the other hand, in the case of New Zealand, they export milk, right, to China because the food safety issue is very important in China. So people really care about food safety and care about the quality of life. So they export a lot from New Zealand for the from the milk. So in that case, you can see that from a foreign business point of view, right, you need to understand what kind of demand that China in the future will generate, right, in comparison with the past several years. So the structure and can be quite different. So, and in terms of the export, you can see that we have, China is already the largest exporter and the second largest import of the world. So this we have huge implications. I will talk about with special reference to Latin American in a second. So basically, that's just a bird's eye view of the economy side of the story. And what I want to say about the challenges about the political challenges of managing this type of reform, I think it's proper for me to say that because I'm an academic, so I'm not affiliated to any government agency, so I have some kind of freedom to talk about this. So basically, you know that in China, we currently have a very important move of dealing with corruption in the government agencies, and I think this is a very as good and very positive sign. And we do need to have a very good, robust governance structure. But in this process, I want to raise the issue of how to develop the reform, how to reform the government of providing very robust incentive structure for government officials, because you know that as a part of the economic growth story in China was promoted by a very the helping hand of the government. So whether you want to describe it as state capitalism or not, where the government or government officials do play a very, very important role in promoting growth. It's simply because the government officials' incentive have been aligned with economic growth in the past 2 decades, right? But in this process, inevitably, right, they have some problems of the corruption problems going on. But in this process, you want to control corruption, so you need to provide some new measures and new policies to further realign the interests between government officials, politicians, and economic growth. Otherwise, they will not have a strong incentive to promote growth. So this is, sorry, in that case, I cannot see this. Okay. Okay, so you can see that the corruption, so the anti-corruption move is designed to, to try to overcome the resistance, the vested interests of the government, because especially in the state sector, because in the case of China, so if you want to pursue more economic reforms, more liberalization, more economic reform, more government reforms. So you need to have to tackle, to overcome the resistance from the vested interests. And in this case, you simply use anti-corruption as a way, right, to overcome this kind of resistance. And so I think that the huge challenge in the future is that we have to develop a very we need to develop a very healthy relationship between the government sector and the private sector, right? Because currently we have seen, traditionally we know that the Chinese economy is dominated by the state. But now we have seen their emerging and the very burgeoning private sector. But in the future, we are not going to, it's not happy for us, I think, to see some a collusion between government sectors and big business. We want to have a very healthy relationship between private sector and government agencies. Otherwise, you see that the collusion, the corruption may invite or encourage unproductive public sector development rather than very healthy relations. Finally, I want to talk about the implications for the Latin America. Basically, we can see that, okay, China and the Latin America have very strong trading links. According to a study from the United Nations, China will overtake EU as the second largest importer and exporter to Latin America in the next few years. And also, we have already seen a lot of FDI from China, both in terms of the investment in infrastructure from the Chinese government, but we also see investment from private sector of China. So basically, I think that the challenge for Latin American business is to try to figure a way to utilize the investment, right, and the trading to your own advantage rather than to of course, it's a mutually advantageous to both parties, but you need to make sure that it's not overly advantageous to China, but how to make more use of the investment trading. And finally, a very broad and a preliminary comment of the China development model, the implication of this for Latin America policymakers. I think the experience of China's economic growth and development is now totally consistent with textbook descriptions of the so-called US-based model, right, in the past decades. So although we may argue that China is converging, right, to the global best practice, but you can see the process also matters. So if you have a good understanding of the experience of China development model, that may shed further light on your development experience of policymaking in Latin American case. Thank you very much.
Thank you, Professor Sun. Let me turn to the next speaker, and let me try to see who is going to be up before I announce the speaker. Okay. So, all right, so maybe I have some control. Professor Bai, why don't you go next?
Okay. First of all, I would like to thank Yasheng for having me here to share my thoughts about growth prospects and challenges for economic growth, especially that in China. I'm going to, as you will see, the title of my presentation is China's investment. The reason I chose this topic is because investment is such a big part of China's economic growth. If you do a simple decomposition of the sources of economic growth, then you find that actually you can divide the previous 35 years into two periods. Before 2007, the capital output ratio was basically stable. So that means investment is basically in line with economic growth. Then after 2008, capital output ratio increases by about 5% a year since 2008. That means to produce 1 yuan of GDP, we are using more and more capital. So that's a very big change since 2008. On this chart, you can see the investment rate and savings rate in China. The blue line is the investment rate. Investment rate is, at the moment, it stands at about 48% of GDP. That's very high. Since 2008, you can see that the investment rate it has experienced huge growth. And in addition to this change, that is the increase in capital output ratio, we also see a decline in total factor productivity. Before 2008, total factor productivity grew by 3.8% a year for about 30-some years. Then after 2008, the average growth rate of total factor productivity was close to 2%, from 3.8 to 2%. So that's a big change. And so from 2008, a large part of the economic growth was driven by this increase in capital output ratio. The problem is, what are the challenges to this model? Can this model be sustained? My main story is that I guess everybody here agrees is that this model cannot be sustained. I will try to explain why and what are the problems. Here on this chart, I show you the rate of return to investment. It's the aggregate rate of return to investment. On the top, we take out the value-added tax and business tax. So that's net of production taxes. And the rate of return last year was 5.8% if you take out production tax. But it will still include income tax. If you take out corporate income tax, the rate of return becomes 5%. So it's lower. Is 5% rate, this is real rate of return after tax. Is 5% rate too low or too high? Obviously, it's not too high. Is it too low? We have to have a benchmark. The benchmark is the cost of lending, the cost of borrowing. Here, I show you the average bank lending rate. At the moment, the average banking rate, in the last quarter, the average bank lending rate was 6.9%. But not everybody can borrow from the bank. Bank lending rate is actually the lowest of all forms of bank lending. If you issue bond in a bond market, the bond market rate is about the same as bank lending. But if you borrow from shadow banking, the rates are much higher. And if you borrow from trust companies, the rates are on average about 9%. If you borrow from smaller financial institutions, then the rates are about 20%. So on average, the rates are more than 10%. So if you generate only 5% return, but you pay 10% cost, that's a problem. You may argue that there is a bit difference because these rates are nominal rates. The rate of return I just presented are real. But inflation rate is actually quite low. Actually, there is deflation in producer price index. If you take that into account, actually the difference between real interest rate and nominal interest rate is negligible. So the implication is that the rate of return from the investment is actually slightly lower than the cost of capital. Obviously, that's not sustainable. How is that possible? In a market economy, you would not see that. When firms borrow, they consider how much return they can generate from the investment. But here, the reason why the rates of return to investment is lower than the cost of capital is because a lot of the borrowers are not very sensitive to the cost of capital. Some of the borrowers are government-related. Some of them are state-owned enterprises. they are not very responsive to the change in the cost of capital. Whenever they can borrow, whenever anyone is willing to lend to them, they will borrow, no matter what the costs are. So that's a potential problem. So with this, with so many borrowers not sensitive to the cost of capital, then there are two problems. One problem is the risk in the financial sector. When you are not generating enough return to cover the cost of capital, then obviously the risk is very high. So this is an immediate concern to the Chinese economy. Actually, our firms are heavily in debt. The corporate debt as relative to GDP is actually the highest in the world for China. Our households are not owning a lot of debt. Our governments are not heavily in debt. Our corporations are. So that's one problem with the issue I just presented. It's the risk. The second issue is efficiency. When firms are not responsive to the cost of capital, they borrow even when the investment is not worth very much. So for efficiency is a big problem. The source of this inefficiency, it very much depends on the structure of investment. Here, I give you some numbers about the structure of investment. There are two main types of investment that are particularly important in the Chinese economy. The blue part is the share of residential housing investment in total investment. That is fairly stable. It's around 20%. So 20% of our investment are in the residential housing sector. It's the non-residential buildings and structure that's changing. Sorry, I cannot see that. Okay. It's the non-residential investment in non-residential building and structure that's changing. In 2007, that ratio was 38%. 38% of the investment were made in non-residential buildings and structure. What are non-residential buildings and structure? It includes infrastructure, it includes factories, it includes government buildings, etc. That ratio increased from 38% in 2007 to 50% in 2012. I don't have the latest number because there is a lag in publishing these numbers. So that means non-residential buildings and structure investment has been increasing very fast. And this type of investment is often related to government, to state-owned enterprises. And as a result, we can see that the construction sector is expanding very fast. Employment in the construction sector also expands very fast. The construction sector employs about 50 million people at the moment. That increased from less than 40 million to 50 million. So you see this sector expanding very fast. What are the costs of this? It may crowd out other sectors. Here, I will only give you one example because this number is so striking. Everybody would think, before looking at these numbers, that IT sector is thriving in China. Alibaba is probably going to be the largest IPO in the world history, which is an IT company in China. There are a lot of successful IT companies, but the share of IT in Chinese economy is actually declining. And if you can also see this from the labor numbers, this chart gives you the relative wage of IT to construction. It's declining. It's declining. The wages for migrant workers has been increasing very fast. In 2010, wages for migrant workers increased by 19.3%. In 2011, that wage increase was 21%. In 2012, it's 12%. In 2013, it's 14%. So with very mild inflation, this kind of increase in wage rate for migrant workers is very much a consequence of the expanding of the construction sector, because a typical job for a male migrant worker is a construction worker. And if you look at total factor productivity, I did an analysis of the total factor productivity of different provinces over time. With this panel data, we can estimate the relationship between total factor productivity, and a number of characteristics of these provinces. One interesting finding is that the investment rate has a negative impact on total factor productivity. Among investment, it's the investment in buildings and structure that has a negative impact on total factor productivity. Investment in machinery has a positive effect on total factor productivity. So total factor productivity grows faster when you make investment in machinery, but it grows slower when you make investment in buildings and structure. However, we are making more investment in buildings and structure. So that has a negative impact on total factor productivity. Then one implication is that I did this, again, a simple exercise. If you assume the economy had maintained the investment rate in 2007, in fact, there is a big jump in the investment rate since 2007. But if you do this mental exercise, if you assume that the investment rate had stayed the same at the level of 2007, then indeed you will see slightly slower economic growth rate, but consumption will expand faster. So our growth in the last 5 years since 2008 has been at the expense of household consumption, has been at the expense of environment. Actually, the investment goods are a lot more energy intensive than consumption goods. And buildings and structure investment is even more energy intensive than other goods. When you make so much investment in buildings and structure, then obviously that has an impact on the environment. So this is a big problem that's facing us. This trend has been changing since last year. Now investment rate is slightly declining, household consumption rate is slightly increasing. That's a very positive change in the trend. We hope this trend will continue. I will just say one thing about the implications about Latin America. That is, we will have to make less investment in buildings and structure. That would mean we would use less resources. But there is another implication, that is, although the investment in buildings and structure in China has not been so good for the Chinese economy. It's necessary, but we may have overdone it. But we have accumulated a lot of expertise in that sector. If learning by doing is of any significant importance, we have learned a lot there. So that's probably one of our biggest comparative advantage. That is the expertise in infrastructure investment. Hopefully, this expertise can not only be utilized in China, it can also be utilized in other parts of the world. I hope Latin America can work together with China, utilizing China's expertise in building infrastructure.
Thank you, Professor Bai. We'll come back to the implications for Latin America during the discussion phase of the panel. Ding Xu?
Yeah. President Xi only a few weeks ago said the world has to adapt to new norm of economic growth in China. And I'm far more optimistic today than 2 years ago about China's future. Because the reason is exactly what Professor Bai said in the last 10 minutes. If China continues to grow at 10 or double-digit numbers, then the systematic risk or even collapsing of the entire economy is not very far away. Because if you look at investment in the last 5 years since 2008, effectively they are all wasted, more or less. I will use more extreme than Professor Bai, basically. Okay, that cannot sustain. So China missed the opportunity in 2008 when the global financial crisis occurred to adjust its structure of the economy, basically. And one very senior official from China Bank Regulatory Commission said the investment in the last 5 years will take 2,000 years to get a return back, basically. That's what he said. Okay. So we are in a very good shape. So economy will grow much slower rate than before, but that means we are on the path of sustainable growth in the future. When China opened its door policy in 1978, over the last 35 years, we have not gone beyond the development model of other Chinese regions, Taiwan, Hong Kong, and Singapore. Investment, export rate, and gradually consumption. Luckily, we are turning into that at the moment. If you read Economist or Financial Times, that's all so-called challenges or potential risks Chinese economy facing. Personally, I do not believe they pose systematic risk to Chinese economy in the future. If we have time in the later questions, we will discuss. Now, China is already second largest economy, but if you look at GDP per capita basis, it's only about 1/8 of the United States. If we assume US will grow 2% per year, and China will grow 7% per year, it will take 30 years for China's GDP per capita to be half of the USA. So this is a huge gap to climb, actually. And if we look at internal GDP for China to overtake the US, again, assume 2% for US, 7% for China, it will take 15 years for China to be the largest economy in the world. So we still have plenty of scope and potential for growth. One single factor in China's success over the last 30 years, effectively, government becomes smaller and smaller, market, and people get more and power. So China has to reform further, and that will be the largest dividend, of course, against so-called vested interest groups. Now, one of them is called a residence permit system. I don't know any other country in the world has it, but in China, even if you lived in a city for the last 30 years as migrant workers, you will be still denied basic health care rights. Your children will be denied basic education rights because you are not so-called resident of that city. 2 weeks ago, the government issued a new regulation that will liberalize resident permit system in the next few years, except for very large cities like Beijing and Shanghai. So at the moment, only about 20% of Chinese people have city resident permit. That will increase massively because very large number of Chinese people already live in cities, but they are denied sort of citizenship in that city at the moment. Second, infrastructure in the West China, I think will continue. From November this year onwards, China will start the cargo train service from Chongqing to major European cities, including London, Antwerp, Paris, and others. That will shorten the journey time by, say, at the moment, about more than 2 weeks to about 6 days. So from that, China will develop western part of its country. Now, one thing we often ignored is the talents we produce. So Professor Bass said we have a rising cost of labor and a shortage of labor force or this. But if we look at number of graduates produced, China produced, last year we produced more than 7 million university graduates alone. And in addition to that, we have 300,000 students returned from their studies in the USA and Europe. So Chinese economy have to upgrade itself to accommodate this kind of talents. It is unfortunate at the moment if you look at the wage salaries, the typical graduate, their salaries are much lower than salaries of construction workers in China, actually, by majority. Very few students graduate were in higher salary than workers in the construction side. The final, China will continue to privatize its state-owned companies. There are two benefits. One is we have to let private sector to play more important role in the economy. But second, the government can raise significant revenues. By end of 2013, the assets of state-owned companies is still more than 100 trillion yuan. That means 17 trillion US dollars. So even China privatized small percentage of the state-owned companies. That will raise a hell lot of money for the government. So one reason I'm not worried about local government debt is exactly like that. In the worst case, they simply sell the assets. Okay. The final one I just talk is very much talk about both inside China and in the globally, the housing market. It is cooling, yes. Collapsing, absolutely not. Like a Chinese economy, in the last 30 years, okay, property development has been key to economic growth. In the last 20 years, has been key to the local government revenue. Most estimate put around 14 to 6% of land sale income as a share of revenue by the local sitting government. That's a typical share. And it is a shady business. At the same time, developers make excessive profit. If you look at richest people in China, most likely they will come from property development sector. Now, why this sector will not collapse at all? I will explain a little bit. One thing in China is quite different from certainly Europe and America is the resources, especially educational healthcare resources. If you go to any hospital in Beijing or Shanghai, 75% of patients are not locals. They are from all over China, basically. That's quite different from other countries. So that means as long as you have money, you want to move bigger cities. If you don't have enough money, you want to leave to small cities. If you look at one indicator, percentage of university students from countryside, it has been declining all the time over the last 30 years. Especially for the top universities, now gone beyond 10%. Although, as I said earlier, countryside population still is 70% of the society. So social mobility is gone. Unless you can receive good primary and secondary education in the bigger cities, you virtually have stand no chance now into getting a top university. That's very different from my generation. Okay? We have plenty of students come from very poor background. That's not the case. Okay? So with one child, every family now have every incentive to move to cities. They try their best to do that. And if you look at the majority of Chinese cities, if you look at standard so-called house income to house price ratio, China's housing prices are not at high level. So if you use a 6 or 8, then it's reasonable. And finally, we have to look at the so-called forward income. As Professor Best said, income for the bottom of society has increased massively in the last few years. It will continue to increase probably at a modest level. And finally, I don't know if it's a Chinese phenomenon or not an American phenomenon. In China, 3 families support one mortgage. You and your husband or wife, and your husband's parents, and the wife's parents. So if you look at that, Chinese housing market is not overheating, it's reasonable. Only a few months ago, economists wrote an article about China's housing market. At least economists believe it is one of most undervalued market rather than overheated market. Thank you.
Thank you, Ding Xu. By the way, there are microphones in the room. So I ask you to think about the questions that you want to pose to the panelists. But let me ask the first question. If there are questions in the audience, I'm going to turn to the audience. The first question that I want to ask is to get every one of you to think about the implications for Latin America. And it seems that that the implications for Latin America are, I just find it hard to see an upside scenario in terms of implications for Latin America. If China stumbles, right, all the bets are off, and it's pretty obvious. If China is successful in terms of restructuring, right, think about the implications. One is that the energy intensity is going to decline, right? So which means that the demand for iron ore, copper is going to come down. So there's the trade flow is probably going to come down. The other way that China is going to restructure is to move from investment to consumption-driven model. The savings rate is going to come down, right? So, and the whether or not China still can have this kind of capital export at the level that it has maintained is an open question. Also, another interesting thing is that Professor Sun talked about FDI booming. Actually, most of the capital coming to Latin America from China is loan capital. The equity capital is substantial, but relative to loan capital is actually quite small. America now is absorbing a huge increase of the equity capital from China. So there's probably more competition between North America and Latin America. And the loan capital, State Development Bank obviously has played a very important role. How much of that is driven by politics and policy, whether or not that's vulnerable to changes in the policy, I mean, that's something that that I want to ask Dr. Gao to think about. But Professor Bai raised a very interesting thing for us to think about the expertise, right? So the infrastructure expertise, because China, learning by doing, China has scaled in a way that no other country has. So you could imagine the expertise export is still going to continue, but mobilizing financial resources maybe from other countries. So that may continue. So let me ask Dr. Gao, so how much of the loan capital coming to Latin America is driven sort of top down? How much of it is driven by the business needs on the ground? And how much of it is driven by private sector investments, private sector activities in Latin America? How much of it is driven by the state sector?
Actually, I don't have the figure and data available, but I guess my feeling is basically the investment is through loan facilities, that is from the bank. And as you mentioned, China Development Bank is the largest instrument for the investment. And CDB's investment through the our branches and our working groups in different countries, and financing resources came from foreign exchange reserve. As long as we have a need of the investment, we can borrow money from the central bank, from the reserves. And this money can be more expensive in comparison with if CDB to tap international capital market in person, maybe just maybe 200 BP cheaper than that. And that is some block for the expanding of the investment. I think the private sector mostly that they are firms, companies, whether the mining companies, construction companies, or some of the manufacturing companies, not many. And I think state-owned enterprises, only those for the oil, the company like Sinopec, Sinok, and for the private company, CDB finance most are those the like Huawei and ZTE, they provide the telecommunication facilities, and this company are very active. I think the private sector not very active due to the long geographical the location. For the traffic cost. For the travel costs very high. And I think most of the Chinese private company, they would prefer go to the Southeast Asia, Central Asia, East Europe, and Africa. They may be more, and that is because of the. Yeah.
What is the reason that we talked about this yesterday as well? You see some problems for Chinese companies in Latin America. What are those issues, challenges for Chinese companies in Latin America?
No, there are not. There are no other, obstacles. The only is, I think, the small companies, the private companies, because they're relatively small, they have no capabilities. In other different regions, the government, such as the Ministry of Foreign Trade, we will call the Commerce Chamber, they are very active to support the Chinese company to go abroad. Yeah. And one more thing is, you talk about the China's economy declining and the demand from the Latin America and Australia for the raw materials will be declining as well. I don't think so. As I mentioned yesterday, China's economy, although declined, but still driven by the fundamentals, will move up to around 7 to 8%. My personal the observation is next year will much likely 7.5 to 8%, not decline to 5-6%, as many people expected it's going to be. I think the China can still generate demand. Maybe the demand will increase after the domestic political readjustment and economic readjustment. And I think for the savings rate, China still relatively high savings rate will not decline overnight. Even we increase the consumption. Also, Professor Bai mentioned the consumption increase a little bit, but not much. I don't think consumption can move up very rapidly because of the underdevelopment of social security system. The consumption rely on the real income, and people concerned about their retirement, children education, medicine. So all of these kinds of things, they need to save money, but this situation cannot change overnight. So for the next decade, China will continue to generate more savings for the investment. And in addition, China, the GDP growth maintain that level for another decade, so we can still maintain the demand for that.
Can I ask Professor Bai to comment on the implications for Latin America, given how you analyze the Chinese economy, especially the contributions of TFP declining relative to investment? Do you see an upside scenario for the TFP to go up, and what will be that scenario?
Actually, these two are related. When you have higher investment rate, our finding is that when you have higher investment rate, TFP grows slower. So if we lower the investment rate a little bit, maybe TFP may grow faster. So if you combine these two factors, growing at 7% seem to be a likely scenario for the next 5 years or so. So even though the economy is growing slower, even though the share of investment in buildings and structures should decline, still the demand is growing. is growing faster than the world average. So that's one thing. I think the growth, the so-called new norm in China creates other opportunities for Latin America. I don't know Latin America that well, but I know this one example. There is this very prominent entrepreneur, Mr. Liu Chuanzhi, who is the founder of Lenovo. Lenovo is a large IT company in China. And his most recent big investment is in Brazil, in agriculture. Dr. Gao mentioned the disadvantage of the geographic pattern. It's far from China, Latin America. Brazil is far from China. But there is one advantage. This is where Mr. Liu think about. That's the opposite seasonality. For agricultural products, seasonality is important, especially for fruit. So he's thinking about, he's actually making investment in Brazil, producing fruit. Because the season is the opposite to China. So the fruit produced here, when China is in shortage, actually here, you produce a lot of fruit. So that geography plays very interesting roles. So that's one story I know of. Actually, food consumption, especially for high quality food consumption in China, is growing very fast. And so that's an opportunity for the rest of the world. And another thing is that the air quality is very much in the mind of average Chinese citizen. I know Brazil has very good expertise in biofuel, and of course, China is different because China doesn't have a lot of land. So that's probably different from Latin America. But that kind of expertise in producing biofuel may be very useful to China. It may need to be modified, but that kind of, I still think there's a lot that we can learn from Brazil in that area. I'm sure there are other areas. We just need to look very hard to find comparative advantages between these two countries. If we fully utilize all these comparative advantages, I'm sure there are a lot of areas these two countries can mutually benefit.
Dr. Sun?
Yes, I'd like to follow this discussion about implication for Latin American. Due to my limited understanding, basically the investment from China consists of two parts. The first part is from the state sector, basically investing in large infrastructures. And the second part, recently, we do have seen a lot of investment from the private sector. Basically, you can see that China has a comparative advantage in producing the low to medium type manufactured goods, such as white goods, refrigerators and the TVs and the micro machines, and also very good at producing at the medium level, you know, the automobiles. Not the luxury cars, but in the basic level and the medium level, you have thin trucks and your buses, all these kind of things. So the private sector have been considering investing money and funds in this sector in Latin America because they want to capture the larger market size and demand. And from the Latin American side, I think it may not be wise to protect the local market by refusing this kind of investment, but to find a way to utilize the expertise of Chinese companies and by, for example, establishing some joint ventures or to try to absorb the manufacturing expertise from the Chinese companies. You know that Chinese companies are not very famous for brand building. They're not very good at brand building, but they're very good at the basic manufacturing capabilities. They're very good at cost, for example, cost control of these kind of activities. So, you know, the Latin American economy cannot just rely on the exporting of commodities, right, in the longer term. So the Latin American business need to find a way to improve their manufacturing capabilities. And I think it's a perfect opportunity to find the win-win situation, win-win solution. So between China and Latin America to work in this area, in the manufacturing sector, because China is really good at that aspect. Thank you.
So before I turn to Ding Xu, I just want to invite members of the audience to also ask questions to the panel. Ding Xu, last final thought, and then I want to turn to the audience.
I'm going to be quick. When you talk about China, it sounds like one country. In terms of economic development, China is not one country. If we're talking about $1 per day income, China still have 100 million population below that. If you're talking about $2 per day, we still have 400 million. That's far more than US population, basically. But that disparity is not within one city. It's more to do with regional uneven development. Okay. In the West, it's still very much backward. I'll give you one example and close off, Guangdong. Guangdong now occupies about a quarter of China's import and export, 25%. And the factories, there are a few cities, Guangzhou, Zhuhai, Shenzhen. If you look at 75% of population in Guangdong, that's the most developed region in China. If you go there, you will be shocked. Their life is so basic. So you have to discuss when you talk about investment and consumption. For vast majority of China, investment structure, especially in terms of infrastructure, will continue to grow. We have to. We cannot leave western part of China to be undeveloped for a long time to come. Okay? At the same time, in the eastern part, especially Beijing, Shanghai, Guangzhou, Xiamen, that region, consumption will be the key. Now, if you are in the consumption business, I just give you one example, Tencent. It's an IT company, okay? They have this system called QQ, okay? The companies all argue, if I make just 1 yuan per person, and if I have 10% of Chinese population to be my customer, I'll make 100 million. That's one of the largest and the second richest person in China. He based his business model on a very small income per person for a very large number of customers.
I just want to make sure that to invite questions from the audience. Maybe Stu, you have a question from social media?
Yes, we actually have one from the MIT Live, and they wanted to know if it's been touched on, but to expand on whether or not you see a movement towards more economic freedom being enhanced or interrupted in the near future.
Okay, so at that level of generality, let me turn to the panelists who wants to talk about economic freedom. What's the prospect? Well, I guess to be more specific, okay. President Xi Jinping talked about reforms, right? But the schedule of the reform is 2020. And do you see any evidence of concrete actions of implementing reforms? And do you see this mostly as a sort of rhetoric and pronouncement?
Okay, I'll give my first shot. I think in the last couple of years, there have been significant progress in expanding economic freedom. Earlier this year, the government announced that in China, there's this household registration system. You are either registered as an urban person or a rural person. The boundary is hard. You cannot move from one registration to the other very easily. Earlier this year, the government proposed to abolish that boundary, except for very large cities. So that's a very important expansion of economic freedom. So that's one area. The second area is that one of the key reform areas the government is pushing very hard on is the reduction of regulation. the government wants to better define the boundary between the government and the market. So especially the premier spends a lot of political capital in pushing through the reduction of various type of regulations so that firms will find it easier to register their company, to operate, to make investment. As a result, the new registration of new firms expanded very fast in this last year. So I do see some important efforts in the area of expansion of economic freedom. But still, there are a lot of potential to further expand of economic freedom.
So let me just add to that comment. The household registration system is not just about mobility of population from rural area to urban area. It also has implications for restructuring the Chinese economy, because the social protection in the Chinese system, the social protection now is only available to the urban registered residents, but not available, at least not at the same level, to the rural registration residents. Once you equalize these two systems, then the rural population can enjoy a higher level of social protection in terms of education and healthcare, and therefore that's going to reduce their incentive to save, right? What is known as a precautionary savings motivation, and that's going to unleash some of the income on consumption of goods and services, right? So it has macroeconomic implications.
Yeah, very important implications. Actually, even in the rural area, social safety net has been improving very significantly. In 2003, the government started a pilot program in providing health insurance to the rural sector. Now that insurance, rural health insurance, has achieved 98% coverage. We did a study of that program alone on rural consumption. We found that that would increase rural consumption by a significant margin, just that introduction of rural health insurance system. Now the government is improving rural retirement benefits as well.
Yeah, but Professor Bai, that's good news. But on the other hand, the Chinese high savings rate is only partially driven by a high private savings rate, right? So
right.
the corporate savings rate is increasing, the government savings rate is increasing. What are the measures to address those issues?
Right. I think you just raised a very important point. Household savings is not the main story. It's the corporate savings and the government savings. The main reason, I believe, we have such a high savings rate is because the low household disposable income rate. Household disposable income as a share of GDP is actually quite low. It's around 50%. It used to be 65%. Now it's around about 50%. That's one of the biggest problems in the Chinese economic structure. And one proposal the government has written in the reform package is to increase corporate dividend, especially the dividend payment of state-owned enterprises, and use that dividend payment to support social safety net. If that happens, then you are effectively moving savings away from corporations to the private, to household sector.
How much of the corporate savings rate is due to the monopoly rent that the state-owned enterprises enjoy? China Mobile, you know, these huge.
Yeah, it is a big factor. We did another study about not only about the savings, it's also about labor income share. The labor income is the most important source of household income. And we found that the increase in the degree of monopoly played some role in depressing labor income share. That has an impact on household disposable income. And so that's one factor, but there are other factors as well.
So the screen says I only have 2 minutes left. I just want to make sure that there is one question from the audience, and because in Latin America, usually we're not short of debates and questions and pushbacks. So yes, please, yes.
Thank you. Talk about the concessions and investment in concessions. My perception is the Chinese company or Chinese people in general don't like too much the concession as a method for investment. Sometimes they say it's impossible for us to wait 30 years to return the investment and so on. So I want to ask you, what is your opinion about the Chinese behavior in relation with concessions in Latin America, concession in infrastructure especially?
I not quite follow the questions.
Well, I think that if I interpret it correctly, the question is that you earlier talked about the willingness of Chinese private entrepreneurs to go to Southeast Asia. The government there is very welcoming of the investments, maybe gave them concessions and favorable terms. But in Latin America, in fact, he argues that the Chinese companies don't really attach too much premium to that. I'm not sure. Yeah, okay.
I think the economic relationship has to do with different levels. One is the government to government, and one is the government agency to the local government agencies. And then they come to the bank, and then the state-owned sector, then the private sector. I think for the economic ties in China, mainly the initiatives come from the Ministry of Commerce, because in charge of the outbound investment. And China Development Bank and the Exim Bank are two important vehicles. And Exim Bank has a consensual term for the investment because it needs some subsidy from the Ministry of Finance. But the subsidies are limited. So the Exim Bank's consensual term investment, the loan, are not as voluminous like the CDB. CDB much bigger than Exim Bank. We finance our investments through borrowing from the market. We issue securities in domestic capital market. We also borrow money from the central bank, that is from foreign exchange reserves. So this is a different system. Although CDB based on commercial term, but our investment, because we have relatively low cost, we have small, the CDB only 7,000 people, with the 400,000 like ICBC. So we're different. So we are cost relatively low. So our loan tend to be relatively low as well. In addition to that, CDB is a policy bank. We are not an institution of profit maximization. We look forward the government policy, the government relationship.
Okay.
That is very important. But for the old state-owned enterprises, they are on commercial terms. And for the older private companies, they have their own interest, so they're not a consensual term. I would like to mention the government, the assistance that is determined by the Ministry of Finance and Ministry of Commerce. That is also one of the channel that has nothing to do with what I talk about, the different level of relationship, as far as I know.
Okay, thank you, Dr. Gao. I see that the time is up. Let me just make sure that the last panel of this conference, we're going to go back to some of these business issues. The panel is going to be led by my colleague, Don Lazard, and let's come back to this issue then. Let me summarize and then close. I think there is some consensus among the panelists that there's going to be a new normal in the Chinese growth prospects, lower growth, but I think there's also consensus that it is not going down to the floor. Hopefully it's going to maintain a healthier 6.5, 7% growth rate for the next, at least for the foreseeable future. That does have implications for Latin America. I was really struck by the statistics presented by Alejandro in the last panel that the commodity exporting Latin American economies, the effect on them in terms of commodity boom is 100% of their GDP. So to go from 8% to 7%, that 1% reduction is going to have implications for Latin America. And I think for the last panel, we're going to come back to this issue, whether or not manufacturing firms in Latin America, whether manufacturing firms in China are going to find new ways of collaborating with each other, new areas of complementarity. That will be the best hope for both China and Latin America. On that note, let me say that we have had excellent discussion from our 4 panelists. Let me invite the audience to join me in thanking them for coming all the way from China. The geography here is a disadvantage, Professor Bai, with the jet lag and all of that, to give us a really, really interesting perspective on Chinese economy. Thank you so much.
Okay.